to sell 50. The price dropped down to 47s. Well, that's a good trade. That's a straightforward $100, right? So you're straight into profit for $100 in that trade, right? So you've got your $100 profit, and guess what happened? I scratched out at $12. So that's a $110 profit on that RGL sequence right there on a two lot, right? There's your $110. When the price goes above, I'm now, because the Warren line and the volatility started to increase short term, and then I started to see them coming out a little bit here. The volatility was still divergent. So with Warren dropping, I was now able to start selling. As the price traded up to 53s, I put a sell stop in at 52s, leaning against the 53 rejection. A sell stop at 53s, a sell stop at 52s, and a hard stop at 54s. So I get taken in at 52s. It's traded a low price, not quite the $100, but it just about touched $100 here. So you could easily say, well, I'm going to put my stop. It was one tick away, so you could say it stops at break even on both my contracts. Because if it stops out, you're going to come back in anyway, aren't you? Assuming the value is still good at that price. Now, why did I move the RGL higher? Because the value went higher. Why would I keep the RGL at the same price? This is what we were discussing at an earlier conversation. If the value is going up, why would I use the same RGL? Because the RGL that was there is no longer valid. So I'm going to try and work into the next phase of higher prices and try and capture that bit of movement, right? Well, that's what I did. I captured that other piece of movement right there as we've been speaking. This is a 1 minute chart, and you can see that it's now done that 44.50. So we've now got our $100 profit on that short trade. So I've now got another $100 on that trade, and I've now got a stop at break even on the second contract. This is only a two lot, guys. It's now $210 in profit. It's now $210 in profit on a two lot, and I've still got one contract outstanding, and I've got a stop at break even. Have I got to wait for something? No. Can I take it out at any time? Absolutely. It's up to me. It's up to me to now manage out that position based on my reading of value and volumes and all the various other elements. And obviously, if I close it out, I can't get any more for it. I've got to come up with a new RGL, but that's my job. As an analyst, I've got to come up with an RGL, right? That's what you do as the analytical part of your trade. As a trader, you've got to trade the analyst's RGL, haven't you? As a trader, you've got to trade the analyst's RGL. So we can obviously start to recognize the process here, can't we? We can start to recognize how easy the process really is. And all you do, what you end up with is you end up with this process of accumulating at highs. You end up with a breakdown phase. You end up with a capper in place. You start thinking to yourself, where's the measures? And you end up doing what we teach in the classroom every single day. It's not different, is it? See how easy that is? See how easy the process is, guys? It's just about process. It's how the locals trade. The locals see a lean. The locals see some outside market value. The locals sell it. Not on the way up, because that's the commercials. They sell it on the way down. When they see the commercial jumping in, they sell it on the way down. They're selling to join the commercial lean. And they make some money and they put their stops at break even. If that goes up another one tick, I'm out of this. And they get rid of their trade and they wait for the next commercial lean. And then they sell it and they take some profits. And then they do it again. And they do it again and they do it again and they do it again. And they just keep doing it, don't they? It's not that difficult, is it? It really isn't actually that difficult. It's just a case now of understanding the process. It's a case of understanding the process and trying to act on that process, trying to act on this and trying to think at the market. We're not changing anything that you do. We're not suggesting that this is any different from anything you've ever done. I was starting to think that with some of the comments in the box there, that people think that this is a different process. It's identical to the process that we teach. Everything about this process is identical. It's just about the process. It's about the idea that all we've done is now we've given it more structure to use whatever structure you want. Well, that's what we do anyway. If I said to you there's a huge gold buyer and they've just been jammed at 50, you go, right, I'm selling at 49.5, damn it. We did this years ago when we did a volume analysis. We says, right, anytime you see high volume, put a reversal buy in. If it's a sell, put a reversal sell in if it's a buy, and that's all you did, right? And we saw that we could make lots of cash through that systematic approach to trading. We could make lots of cash through that process. Now, as you've just seen, the price, if you were a multi-lot trader, this was always going to be one of your targets. You could have taken some nice money out here, but as a systematic trader with a 2-lot, it's up to you whether that was good enough for you to close out your trade. Now, you can see that the Warren line was going up, the volatility line was going down. What you might have done was if the price came back above that line, you could have closed out your trade and says, right, I'm getting ready for the next opportunity. And that would be a reasonable approach, wouldn't it? That's basically what a trailing stop is. I don't like trailing stops. I'd rather be responsible for my own entry process, but that's not systematic. A trailing stop is systematic. A trailing stop says if the price doubles back after that line's taken out, I'm closing my deal, 47 approximately. And that would have given you a 5-point profit at 47s. You're now flat and you now have to find a new RGL, right? That's the analyst's job. Find me a new RGL, you shout across the room to the guy in the corner. Their job's now to go and find you that, and then your job as a trader is to go and trade it. So you might have done that trade, 47s from a high price of 52s. 5 points, $250 more on that trade perhaps, if that's how you're trading it. You're now flat the market. So if you're now flat the market, where's your next RGL? Who knows? Who knows where your next RGL is going to be, right? You haven't got one. So your job now is to try and assess value, volume, at price. Where have you heard that before? Your job now is to find value and volume at price. Your job now is to try and figure out where the next RGL opportunity is. You can see Warren's still very bullish. Volatility is diverging, so this looks interesting. So this could be something that we could see coming up very, very shortly as an opportunity. Obviously, in the face of it, a sweep of the top edge would give me an RGL at 53s, and we'd put a hard stop in at 55s. Pretty good, right? Pretty good. We'll wait to see if that shows up. But now you're an analyst. You're not trying to find a trade. You're trying to find an RGL, right? Don't confuse the two. Do not confuse the two. You're either an analyst or a trader. Your analytical job now is to pass on to the traders. Right, guys, we're now flat the market. Let's see if we can find a way into this. Let's see if we can find a way into this trade. The best RGL just now would be a buy trade here, wouldn't it? We could do 47s down to 45s, couldn't we? We could do that type of RGL there. That would be a good RGL. With the volatility bullish and with the Warren line bullish, that would be a great RGL right there, wouldn't it? But obviously, by the time the price trades into that area, the value may well change dramatically, and we might not have any trade, right? But that's what I would be doing as an RGL right now, is that RGL. But that's, as I said, that's if the value was there. If the price was there, I would be looking at that as a possibility. So at the moment, there is no RGL. And guess what? You're probably happy because you're managing an open position, aren't you? You're managing an open position right now. And you're saying there is no better business for me here. There's nothing I can do with this. There's nothing I can see. There's nothing that I want to be seeing just now. I don't want to be trading this. I have no interest in it. I'm happy to be on the sidelines waiting for my opportunity to show up. Good. Confidence that you can do whatever you want to do. Confidence that you can trade anywhere you want to trade. Now the volatilities came right back down again. Obviously, that RGL would not be a trade at this stage because the volatility's dropped. See how it's still the same thing? We've got a sweep of the stops here. We've got a sweep of the stops here, and that's good. Now, obviously, we've got a big level at the bottom edge here, but obviously with the Warren line still bullish, I'm wondering just how much downside we've got in this trade. If that volatility had diverged, I would have been doing an RGL buy trade into that area, wouldn't we? Very definitely an RGL buy trade into that area. That would be a definite. But that's not what's happening, so I'm not going to be doing that anytime soon, right? Process. That's all it is. Process, process, and a little bit of process.